What's going on, everybody on YouTube? Griffin here, coming back to you guys with another quick little video for you guys the day after Thanksgiving. Hopefully you guys did have an awesome Thanksgiving. And first and foremost, before we get started, if you're new to the channel, definitely consider hitting that subscribe button below. We love to add you to our awesome community of like-minded individuals. And we also have a Discord group chat with about 40 members in there, so it's a nice little small group chat that we have. So if you want to reach me directly or chat with a bunch of like-minded individuals, like I said, that's also on the first links in the description box. But as I shoot this video, there's about a minute actually until market open, and it looks like today's going to be overall a pretty bloody day. But what I'm focused on the most is oil. You know, I've been focused on oil a lot the last few weeks. Why? I mean, it's literally $26, $27 off of not all-time high, but the 1 year highs, and it just keeps falling. Now, what would I do in this situation? So overall, you guys know I've been bearish on oil ever since pretty much around the $75 mark. I could tell over and over $70 to $75 was a strong resistance this last year, and that's when I started getting bearish. I knew once we got into the cooler months, not because of natural gas, when you have cooler months, natural gas prices spike, right? But with oil, I mean, other than Christmas time and Thanksgiving, there's really not much traveling going on, so the demand for oil goes down a little bit, and obviously the Saudis, OPEC, whatnot, keep pumping tons of oil. And you can see when we go back to XOP, which of course, as most of us know, is the spider ETF of oil. Sorry about that, it's been a while since we had the bell go off during a video. But you can see oil ETF getting smacked right now. Another one is Gush. Gush is getting smacked right now, $15, almost, not even almost. It now hit a new 1 year low. Actually, I think this might be a 3 year. No, this is 1 year. 1 year low. Drip, on the other hand, has hit 1 year, almost close to the 1 year highs. Obviously, it spiked last year, early this year, actually around in February. But we don't really care about those two. XOP is the biggest one that we trade. So how would I adjust my trading style when it comes to options and whatnot in this scenario where we're obviously kind of in a more bearish market right now? I'm not saying by any means that we're going in like the market's rolling over. It's just definitely starting to look more and more likely. Like overall, we're in a little bit more of a bearish market right now. So how would I go about trading my options? Well, instead of doing a traditional like iron condor, as you guys know I like to use a lot, I'm probably going to have to reload this. It's not loading for some reason. Everything's delayed. I'm going to go ahead and load that back up. But so what I'm going to do is do a short call vertical spread. So what I'm saying is I'm still bearish obviously on XOP. So what I'm going to do in this video, show you guys how to go about doing a short call. I think I either did a short call or short put vertical spread video before. You can check that out for a little bit more info on that, but I'm just going to show you guys how I would go about it instead of doing the iron condor, because one, the iron condor isn't paying as much for the security. When you're looking at those 70 to 80% potential for profit trades, you're only making like a couple bucks at the most. I mean, which obviously you guys know I say don't focus on the dollars, but I mean there was one trade, it was saying 73 cents. 73 cents on $47 trade just is not worth it in my opinion. So I'm going to go ahead and just show you guys. So we got a 1 week here right now. You can see we're down $1.08, and the IV rank, awesome for us, up to 77 almost. So we're going to do, like I said, a short call vertical spread. I would not do 33, obviously. Potential for profit 65. I think that's being nice. What I would do is I'd probably go out to either 36 and 35, because you see that's around 10%. And you can see we have an 88% chance of profit. So as long as it stays below $35 in 7 days, you'll collect. You won't get that exact price. You'd probably get 7 off of $93. So you're talking roughly what? I mean, after commissions, unless if you're using Robinhood. So you're talking about roughly $5 off of 95. We'll just round up and whatnot in this case. We'll just say $4 off of a $95 investment. You're talking 4.5%. So that's a little bit better than the iron condor I was looking at earlier. Or I would probably consider even doing the 34.50 in all honesty. 17% chance of being, 16% chance of being in the money. Not very high. I just like to tend to stay around 10% usually. You can see our potential for profit is still 83%. Very good, but it looks like apparently, so we have $7 off of 43. So see how just 50 cents to a dollar can make a huge difference. Your profit is still going to be around $6-7, but you're only putting forward about 48 or something. So let's just again round up. We'll say $4 off of a $47 investment. $4 off of a $47 investment. At that point, we're talking almost 9% just off this one little trade. So you're talking roughly a little over 1% a day at that point. So I mean, that's not bad. And it's a pretty damn safe trade. You're talking 82-83% chance of that trade playing out in your favor. Another stock. I don't know if we can do options on Gus. Maybe we can. Yeah, you just have to do the longer out options, which I don't really like. But I'll just show you guys an example. So what we'll do is, so this is a 28-day, which a lot of people actually like trading as the more 28 days out. I personally do not. But let's just say you wanted to do, I probably don't think Gus, in all honesty, is going to get back over $20 in the next month. So you can see 17%, 14%, 84% chance of profit. Definitely a good chance. Like, let's say, like me, I said I didn't think it's going to get above 20. I went ahead and did 21 because I like to have that little bit of buffer just to be safe. But say, like, for some reason you think you're certain it's not going up above 20, then by all means you could collect a little bit more premium. You're still at 81% chance of profit. So I would probably even consider doing this trade. Again, you're never going to get probably the exact midpoint. I'd probably say $17 probably be what you get. So you're talking $15 off of an $85 investment. 85, bam, you're talking 17% overall for that position. Divide that by 28 days. It's going to be a little less than 1%, a little over 0.5%, about 7/10 of a% per day. That's why I don't really like trading those 28-day options. One, because I mean, you have a good idea usually, especially when it comes to oil, on what's going to happen for the next couple weeks to a month. But I mean, for all we know, I mean, oil dropped this fast. Who's to say it won't go back up $5, $10, $20 here in the next month at the same time, right? I doubt it will, but I mean, you just never ultimately know. And that's why I like doing the shorter term, which is why I like doing XOP, because why would I settle with making 17% in 28 days whenever I can make, what did we say? So let's just say $3. I think it was 4 that we were talking about. $4 divided by a $48. When you can make 8% in 7 days, so multiply that by 4. 7 times 4 would be the 28 days we were talking about. Say you did that every single week, roughly 7 to 10%, which you can do with these vertical spreads, iron condors, all that. Bam, 33%. So I mean, you doubled your profit damn near just by doing weeklies versus doing those 28-day options. I understand why a lot of people do them, because it allows you to go a lot further to like the upside or downside, whichever you're doing. Because I mean, we have it at 34 and 35 on the XOP. Say we went to 28-day and did it. If we did 34, did we do 34.50? I think, yeah, 34.50. So if we did that same trade, the potential for profit drops down to 70%. You're talking roughly 15. So I mean, let's look at the profit there. 12.37. We'll just say 13 divided by 38, rounding up to make it easy. You're talking 34%. So I mean, in this case, that trade's not bad, but I mean, it only has a 70%, 69% chance of profit, where the trades that we do on a weekly basis usually have 70, 80+% chance of profit. And you're not necessarily so stressed because it's 1 week. I mean, usually you have a good idea on where a stock's going in a 5-day period, 7-day period, right? Hopefully that makes sense. But at the same time, like I said, this allows you also to kind of pull yours out a little bit further. So you can see now we're at 76% chance of profit. You're probably going to get this for around $12. So we'll say $10 off of 40, essentially. $10 divided by 40, 25%. So I mean, I see the argument on both sides, but my side, I just like my side a little bit more because, I mean, it's shorter term. I mean, it's just all about getting the quick, not necessarily quick because it's not on a daily basis, but a lot less risk in my opinion, because I'm not having to wait a full month. Obviously, you can close these positions at any times, but you're going to cut into your premium that you collect big time, and it's just not worth it in my opinion doing these 28-day, 50. I mean, I know there's people that do 2-3 month options. It's just not my thing personally. Maybe when I become like a super rich, well-off, successful investor or whatever, maybe then. But I mean, I just like the fact that I can go to 7 days, and like I said, we can. Where's our order at? Here, let me clear this order. Okay. I just like the fact that, like I said, we can do a 1 week option and get a consistent, what is it? 81% chance of profit. And again, it's changing a little bit dollar by dollar here and there just because the market's obviously open right now and fluctuating. So I mean 6 divided by 45. Right there, that's 13%. And like this trade, I don't know. I'd probably do it still. 81% chance profit, yeah, I would do it. I mean 13% profit, like I said. I didn't mean to do minus. 13% times, if you did that in 4 weeks, boom, 52% profit in a month. Obviously, you're probably not going to get that exact 13% a week. You're going to get 7 some weeks, 10 some weeks, 20 some weeks, 5, maybe minus a little here and there once a month or something, just because you had a trade go bad or something. But I mean, it's all about covering the profits, cutting the losses, and figuring out how to maximize your profit while still having an awesome percent chance of profit at the end of the day. So hopefully you guys learned a little bit from this video. Like I said, I just like doing it while the market is live. I mean, it's been a while since I did kind of a video while the market's live, and I just kind of wanted to throw in another kind of aspect at you guys, because I know the market's super volatile right now, and everybody with the iron condors and whatnot are kind of like, man, I mean, I don't know how to really set up my iron condor, because especially like in XOP's example, I mean, let's go out here. I mean, XOP right now is at, it could come down, probably clear down to $30, and it could probably go clear up to 35, maybe 35.50 in the next week. It's just super volatile right now. So I mean, I would probably do the 34.50, and then I'd probably do the 30.50. So I mean, right here we still only have 70% chance of profit. I'd probably go ahead and drag this down to 30. So yeah, this one, 75% chance of profit. We'd probably only get it for $12. So $7.46 off of $92. You're having to put up more money because you're having both sides. You have a less percent chance of profit, and you're collecting pretty much the same premium, right? Do you guys remember that? Go ahead and like remember this. Write this down, something. $93, $7.46. Now if we go back to our short call vertical spread, we said as long as what? As long as it stays below 34.50, we'll collect pretty much the same. I mean, $2 less, but at the same time, we're putting forth half the money. Because why? Because we only have one side of the iron condor. We have the bearish side, the side we don't think it's going to reach. So, and also, by the way, we have almost a 10% higher chance of profit, right? So I just wanted to throw this angle at you guys because I know I've been hitting iron condors really hard lately. I love iron condors. I think they're an awesome potential source of passive income, but I also think that these vertical spreads can too, especially when you have a bearish market like the oil market right now, where you have a pretty good idea, hey, it's probably not going to reach blah, 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 which is why I love this percent chance of being in the money. Like I said, as long as you stick around that 10% mark, 84% chance of profit, and you're talking roughly, I mean, again, we can break it down all day, $4 divided by 47, rounding up, of course, 8% profit. So I have an 83% chance of making 8.5% on my money in 1 week. I like those odds versus 75% chance of making pretty much the same profit. You get almost a 10% chance higher potential of profit, if that makes sense. So that's pretty much it for this video. Like I said, I just wanted to throw another aspect at you guys because, like I said, I know I've been hitting those iron condors really well. You guys know I do love them, but in some cases you just have to look at things from another perspective and think, well, maybe I have a better percent chance of making pretty much the same amount of money if I do it a different way. And that's what I was doing here. I noticed, hey, this is actually better than iron condor. Went ahead and did a video for you guys on it. So hopefully you did take a few things from the video. If you did, and if you liked the video, definitely make sure to smash that like button. I greatly appreciate that. And like I said, if you're new to the channel, definitely consider subscribing below. We'd love to add you to our awesome community of like-minded individuals. We just hit over 440 subscribers yesterday on Thanksgiving, so that's awesome. We're on that quest to 500 by the end of the year. Like I said, if I reach 500 before the end of the year, I'm going to do a special video, live stream, and I'm going to pick a person out of the chat to send Gary Vaynerchuk's Crushing It, Grant Cardone's Millionaire Booklet, and I'm also going to throw in Rich Dad, Poor Dad by Robert Kiyosaki. So I'm going to send somebody 3 books, just as a little giveaway thing, I guess. So we love to have you here, and like I said, if you subscribe, definitely check out our Discord group chat as well. There's about 40 of us in there. It's fun to just chat it up with a bunch of like-minded individuals. But until next time, guys, keep on going out there making those profits, covering your profits, and achieving some financial freedom this year. And I hope you guys have a good rest of your holiday season. But until next time, guys, take it.